Hey guys, Bix Weir, rotoroo.com with your morning horn of Z's, and I already drank my tea. It is day 11 of the cleanse. Feeling good, more than halfway done now. It's a breeze, 10 more days. Big deal. Um, Congratulations to everyone who's doing it, and you're doing great. Awesome job. Want to talk about, well, first of all, I am talking with Bitcoin Ben because I dared to talk about Divi and the inflation rate and the centralization. I'm talking to Bitcoin Ben and actually Jeff McCabe, who is a co-founder. There was two founders of a cryptocurrency called Divi. I am not hating on Divi. What I'm saying is it is almost impossible, almost impossible to become a quote cryptocurrency, as in a currency, as in people are going to use it as money. Almost impossible for various reasons. Um, but especially the centralization part and the inflation part. But we'll talk about it. And I am open minded to everything. And if he can explain to me why Divi is so important to be used as money as opposed to fiat money, I could buy that argument. But as opposed to other cryptocurrencies such as Bitcoin and Litecoin, it would be a tough sell for me to say that Divi was better than Litecoin. And what do you want to invest your money in? I'm just saying. It'll be a good discussion though, and I'm looking forward to it. And it's not like I don't like the guys over there. I don't really know them. I'm sure I'll meet them at the Bitcoin Ben meetup coming up in April. The big Bitcoin Ben meeting in Texas. Make sure you guys go there, and I'll get to hang out with those guys, which would be cool. But as far as becoming a cryptocurrency, I mean, it is almost impossible for Bitcoin and Litecoin to become cryptocurrencies competing against the fiat money system. The other stuff is mainly, there's privacy coins and the use cases to hide your money. There's platforms, Ethereum, to build businesses on. There's businesses and all that. The cryptocurrency aspect is almost impossible. Um, Especially without network effect and with anyway, I will get into that with him later with both of them. Bitcoin Ben, I'm really curious about his reversal of his stance on what makes a cryptocurrency, his labor aspect of cryptocurrency that he's been talking about so much. So be prepared, Ben. And yeah, Jeff, it'll be good to talk to you. Nice to meet you. That's later. It will be posted probably tonight. We're going to talk this afternoon. Cool. Let's talk about what's going on at the Fed right now. The Fed has, people will look at today's repo, $52 billion, $52.6 billion, and say, yeah, it's more than the last couple of days, but yeah, so what? 52.6 billion. It's nothing like the hundreds of billions. This is a day that's not even a big day, supposedly. There's no tax bills due. That's not why the cash is gone. There's no end of quarter or end of year stuff going on. They don't have to be within the regulators' parameters of how much cash they have on hand. All the excuses are gone today. And how much did they have on loan today in the repo market and have done of the banker bailout since September? Over 500, a big jump over 500. 521 billion is needed tonight. This is the overnight repo, the term repos, and the POMOs. Let me check, just make sure I'm correct here. Shoot. Wait, subtract out. Oh, I see what's going on. So this 52.6 is covering. We had a POMO mature. So 56.3 and then a 50. Okay, I didn't catch this. I will change the chart. So basically, they replaced a temporary repo that was a couple weeks long with this pretty large overnight repo, which means tomorrow night or Monday night they're going to have to do the same thing. So this number is different. It goes back to 500 billion. That's all they need. $500 billion for the banks to stay afloat tonight. It has to be there. Some of it is in overnight repos. which is the 52.6. There'll probably be a reverse repo later today, which I'll add to this chart. This is for private road members, you guys, and Patreons, but I'm showing everybody right now. And we're moving right along. I'm thinking 700 billion by the end of the month. Now, it might be a stretch where it goes in jumps and fits and starts. But it is absolutely required. $500 billion was required tonight for the weekend for the banks to stay in business. That is important. Why? Because if that money's pulled out, JP Morgan is not only not making its gigantic bonuses, Jamie Dimon, is not only reporting record earnings, they are actually insolvent. If the Federal Reserve didn't step in to save the banks would be insolvent, and the too big to fail banks would cause a contagion destroying all banks. So the Fed comes up, gives them $500 billion, $500 billion since September. $500 billion. No, people tend to add up the overnight repos, which is $5 trillion. But remember, they get paid back the next day. But the $500 billion is needed. There's no talking your way backtracking that one. $500 million was needed to be injected so Jamie Dimon can get his bonus. What is wrong with that picture? A lot. And then you have the fight, is it QE or not QE? If they weren't rolling it over every day, it would probably not be QE, quantitative easing. But they are. They are rolling it over every day. They are rolling over the term repos too, which we can see right here. Term repo right here. This is the one that's being covered. On 12/16, the Fed announced a term repo of $56.3 billion that would mature on January 17th, which is today. And how much is the overnight repo? 52.6. So basically, the difference paid back was 0.7 billion. They didn't pay back the 56. These term repos are bullshit because they're not paying it back. It's just getting rolled over. Right now, we're at 500. So Neil Kashkari, just one of the most criminal bankers, liars, cheaters, stealers, computer expert, by the way, within the Fed and the Treasury, and the bad guys want to make him the head of the Fed probably at some point. Neil Kashkari appeals to QE conspirators. Show me how the Fed is moving stock prices. So here it is. I love Zero Hedge. Things are starting to get surprisingly heated at the Fed. Now that not only Wall Street strategists and traders, but also the Fed presidents are starting to tell the truth about how the Fed's not QE, which, sorry, but we can call it by its real name QE4, is pushing stocks to ridiculous nosebleed record levels, as one can see by the relentless melt-up of the S&P over the past 4 months, at valuations that are now higher than the dot-com days. It all started when, in a bizarre moment of honesty, Dallas Fed President, former Goldmanite Robert Kaplan, admitted in a Bloomberg interview that the expansion of its balance sheet was helping to lift asset prices. Commenting on the Fed's massive liquidity response to the JP Morgan precipitated repo crisis, we've talked about that, which triggered not only the first Fed use of repos since the financial crisis, but also $60 billion in monthly T-bill QE. Kaplan said that, quote, "My own view is that it's having some effect on risk assets." Of course it is. They don't have to put their money in the repo market. They can take that money and throw it into risky assets because they get free money from the Fed. The Fed adding money keeps interest rates down, which means higher risk can be taken, and they need those returns. So bravo, they're going after everything. Adding that quote, "It's a derivative of QE when we buy bills and we inject more liquidity. It affects risk assets. This is why I say growth in the balance sheet is not free. There is a cost to it." Of course there is. And he goes over a whole bunch of charts on the Fed and the insanity. This is the road to Ruta theory playing out. Print money to infinity. Have your assets in your own possession. In your own possession. And make sure they're good assets. The good cryptos. the good cryptos, because most of them won't last. If there is a collapse in the old system, without an instant reboot, we got a problem. The instant reboot can't be the old system just under a different name. It can't be all these derivatives still alive and kicking. It can't be all these banks still surviving. Fractional reserve banking will go away. And that's important to remember. So, yep, here's where we are in the repos. 500. I will change this on the private road and on Patreon. But it's 500 billion is needed for this weekend. Remember, Jamie Dimon and JP Morgan, record earnings, which means record bonuses. Even though, had the Fed not put this in, they would be out of business. And they're under investigation by the DOJ for RICO charges. This is the crazy, mixed up, screwed up world we live in, and we got to deal with it. Bix Weir, you guys have a good weekend.